The last 4 times my technical indicators flashed this specific signal on SushiSwap, the price rallied 1,100%, 120%, 300%, and 420%. Today, that signal is back. We are looking at a historic setup on the 2-week chart that most of the market is completely ignoring. But there's a catch, and it's a deadly one. While the upside potential is massive, we are standing on a fragile trapdoor at 25 cents. In this video, I'm going to show you exactly how I'm playing this setup. I'll break down the 200% yields you can farm while you wait, and the exact price level where this bullish signal gets invalidated. Let's dive in. Let's be real about where we stand. SushiSwap has been in a brutal downtrend since 2021. The sentiment out there is terrible. And usually, that is exactly the kind of environment where smart money starts paying attention. Price has bled down to this 29-cent region, testing the patience of every remaining holder. But here is the critical distinction. We are not at the macro bottom of the channel yet. We are floating in the middle of a massive descending structure. This makes our current position incredibly fragile. We don't have the luxury of a hard channel floor below us. We only have this local support shelf at 26 cents. However, while the price action looks precarious, the engine room of the protocol is printing numbers that don't match this bearish chart. We need to look under the hood because the on-chain data is telling a very different story than the price tag. So, what's actually happening behind the scenes? There's a massive disconnect between sentiment and usage right now. First, let's talk about the Katana DEX partnership. Katana is pushing serious weight. They have processed $420 million in trading volume on Sushi. That is volume, not liquidity. That means people are actively using this rail. The total value locked, the actual money sitting in the smart contracts on Katana, is around $82 million. That is a very healthy ratio of capital efficiency. But here's where it gets interesting for us as yield farmers. Because they are incentivizing liquidity so aggressively on Katana, the APRs are astronomical right now. We are seeing stablecoin pairs like USDC and USDT paying around 25%. We are seeing Ethereum pairs paying 5%. And if you are willing to take on volatility, the USDC to Ethereum pair on Katana is paying around 200% APR. Now, a warning. Most of this yield is paid out in the Katana token. My strategy with these high-emission farms is always the same. Harvest daily and sell. If you sell fast, that money is yours. It is a way to compound your position while you wait for the Sushi chart to play out. Let's look at the broader liquidity breakdown. Sushi isn't just one chain. On Ethereum mainnet, they are holding steady with $87 million in TVL. On Katana, like I mentioned, $82 million. And on Polygon, they have about $9 million. This multi-chain presence is keeping the protocol alive. We also need to look at revenue. In 2024, the protocol generated over $10 million. Right now, according to DeFi Llama, the annualized revenue is tracking around $1.6 million. Is it lower than the peak? Yes, but it shows the protocol is still capturing fees despite the altcoins bear market. And finally, for those of you who prefer the passive route, don't forget the classic Sushi bar staking on the Ethereum mainnet. You can still stake your Sushi for X Sushi to earn a cut of the platform fees. It is the original real yield model. So the fundamental picture is this. We have a protocol that is processing nearly $500 million in volume on its partner chain, offering triple-digit yields to liquidity providers and generating millions in revenue. It's not a dead project, it's a working business trading at a discount. Now, let's see if the chart gives us an entry. Let's pull up the 2-week chart. This is where we need to be surgical. We are inside a massive descending parallel channel that goes all the way back to the 2021 peak. But here's the catch. We are not at the bottom of this channel. We are trading in the middle. This is technically no man's land. Because we aren't at the channel floor, we don't have that ultimate safety net. We are relying entirely on a horizontal support zone between 26 cents and 30 cents. This is my load zone. If this shelf breaks, there is nothing stopping gravity from pulling us down to the channel bottom. Let's look at the moving averages. We are currently below the 10, 21, 55, and 100 EMAs. That's objectively bearish. The trend is down. However, the distance between the price and these moving averages is stretched. In trading, price acts like a rubber band. When it gets too far from the mean, it tends to snap back. Now, look at the Heikin Ashi RSI indicator at the bottom of my chart. This is the money signal. It's currently in extreme oversold territory, pointing down. I have marked the last 4 times we saw readings this low with green vertical lines. In 2020, this signal preceded a 1,140% rally. In 2022, it gave us 120%. In 2023, 300%. And most recently, in late 2024, 420%. Every single time this indicator hit this floor, a massive rally followed. We are at that floor again right now. We also need to look at the volume profile on the left. The point of control, the price level with the most historical volume, is sitting up at 70 cents. Price acts like a magnet to high-volume nodes. Since we are trading around 30 cents, a move back to the point of control would be a clean 100% move with very little friction in between. However, we must respect the invalidation. The support at 26 cents is very thin. If we lose that, the next major structural support is the 1618 Fibonacci extension level, down at 14 cents. That is the danger zone. So, how am I trading this? I'm treating this as a position trade, coupled with a yield farming strategy on the side. My strategy is a long with a tight leash. I'm accumulating spot sushi in this green box between 26 and 40 cents. This is my load zone. I'm betting on this local support holding and the RSI mean reversion. However, risk management is everything. My stop loss is a hard line in the sand. If we get a weekly candle close below 25 cents, I'm out of the trade. No questions asked. A close below 25 cents validates a breakdown of this local shelf, and I have no interest in holding a falling knife down to 14 cents. If that stop loss hits, I'll flip my bias. I will look to open a short position with low leverage, 1x or 2x maximum, targeting that 14-cent region. If we hit 14 cents, I'll close the short and start aggressively accumulating a long position again for the next cycle, likely averaging down toward 10 cents if it wicks that low. But if this 26-cent support holds, here are my take-profit targets. First target is 44 cents. This is the previous major support that we lost in July. It will now act as resistance. If I entered below 35 cents, I'm taking some profit here. Second target is 90 cents. This aligns with the 618 Fibonacci retracement level. Third target is $1.40. Fourth target is $2.80, which is the top of the channel structure where we rejected in late 2024. And finally, I'm keeping a moon bag, a small percentage of the position, risk-free, targeting $6 in case we enter a full-blown alt-season mania. As we hit each target, I'll be moving my stop loss up. Once we hit target 1, my stop loss moves to my entry price. This guarantees a risk-free trade. To summarize, SushiSwap is offering a rare setup. You have the ability to earn massive yields on Katana, up to 200% on some pairs, while you wait for a technical bounce from a deeply oversold level. But the chart is fragile. We are balancing on a thin support line at 26 cents in the middle of a macro downtrend. The risk to reward is excellent, risking a 5-cent drop for a potential $3 upside, but you must respect the stop loss. If 25 cents breaks, we are going lower. I'll be posting real-time updates on this trade, including exactly when I trigger my stop loss or take profits in my free Telegram group. The link is in the pinned comment below. It is the best place to get these updates before I can make a video. If you want to see another setup on a DeFi infrastructure token that is showing similar signs of bottoming, check out the video on your screen right now. Much love for watching till the end, never financial advice, and I'll see you over there.